Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, August 16th, 2010. This morning we're talking about China surpassing Japan. Now, overnight, Japan reported less than expected GDP figures, which allowed China to leapfrog them into second place in the global size of global economy, or the global race to see who's got the largest economy. Obviously, the U.S. is still number one, but now China's too, taking over for Japan, which I think it held on to that title since fall of West Germany, I think, back in the late 60s. I should probably double check that, but so Japan had been in that role for quite some time. In any event, their GDP figures came in at 0.4%. There was an expectation of 2.3%, so that was majorly disappointing. What that did was that sent the Nikkei lower, okay, which also then sent the yen a little bit higher. So we're seeing some yen strength. Just looking here on the chart, 2-hour chart. Looks like we're going to try and revisit the 15-year highs for yen versus dollar. And, of course, now the intervention talk is starting to heat up, but it remains to be seen what, if anything, they're going to be able to do. I mean, sure, they've been known to intervene in the currency in the past, but, now you have, it's going to be a lot more difficult. There's a lot more players in the market. There's a lot of different factors going on that, look what happened to the Swiss when they were intervening. I think they just reported, a couple $1 billion loss. I'm not sure how big it was, but, you can go back and you can look at George Soros and the Bank of England when he basically broke the Bank of England. So, I think the Japanese may be a little bit hesitant this time to go ahead with intervention. Now, of course, if they don't intervene, that's going to be bad for their exports, which in turn is going to be bad for their stocks. So we're going to have to keep an eye on Japanese yen here. But I'm thinking it looks like we're going to try and revisit these lows and possibly go lower. Let's just take a look here, see on the 1-month chart. Yeah. Yep, it looks like we can come down maybe to, the 84 level thereabouts. So we're going to have to keep an eye on that. Just checking in with the euro here. Euro's a little bit higher. They had CPI figures came in largely in line, increase of 1.7%. It shows that, prices are pretty stable. They're increasing a little bit. And, the economy there, it's moving forward, but not as quickly as some people may or may not like. That's always going to be a problem now because we've got slowing global economy. With the exception of China, everybody else is sort of cooling off. The UK and the Eurozone, they've actually announced austerity measures. So, people should be aware of the fact that yes, global economies are going to slow. So I want to show you here the pound real quick. Let's look at the pound, higher versus dollar. We've obviously got dollar weakness this morning. You can see it actually up here. We'll look at the Aussie in a second. That's actually higher versus dollar as well. But we've got the pound. It looks like it just put in a little bit of a bottom right here around, 155. Just above 155. We can run a Fibonacci retracement on this, see if anything pops up here. Yep, look at that. Sure enough. Sometimes it's like clockwork. Basically, it sat on its 50% retracement. Looks like it's bouncing higher. If we can break through the 38.2 level, then we could get a return up to the 160 area. Now, that, of course, is going to mean that we can't have any risk aversion in the market. So, if things just continue along as they are with slowing but no major announcements, we could see pound higher. Now, of course, we're going to get the minutes from the rate policy meeting here in the B of E. If if there's a change in sentiment, and also we've got CPI data coming in, I believe that's on tomorrow as well. Should that come in outside of the band or even increase, then we could see speculation that they're going to have to do something about inflation over in the UK. But as of right now, it appears as though they're prepared to support the market with accommodative policy going forward, as home prices just recently came in a little bit less than expected. Just want to show you the Aussie real quick. Nothing major here, but you would think that today would be a little bit more of risk aversion day, but we've actually got the Aussie higher than USD. Okay, that comes, based on the report that China's still, expanding. Their economy is doing well, and the Australians will stand to benefit when that happens. Now, conversely, if you take a look at the loonie, all right, versus USD. You can see the dollar's been strengthening against the loonie as of late because Canada's more dependent on the U.S. for their exports. So Australia exports to China, Canada exports to the U.S. If China's doing well and the U.S. isn't, that's going to favor Australia and not Canada. So that's what we're sort of looking at there. Like I mentioned, we should be no surprise that global economy is slowing. But what it really comes down to is sort of what China thinks about what's going on in the world. They've amassed all these global currency reserves, and actually they've been attributed to recent euro and pound strength. So, they're not in favor of current U.S. policy, the extend and pretend, load up on debt and not, take any steps to do anything about it. So it's going to be interesting to see what happens down the road if the Chinese decide, hey, wait a second, you know what, we're not enamored with U.S. U.S. dollar denominated assets, and maybe we're going to have problems funding some of these treasury auctions that we have. So we're going to have to see what happens. But rightly or wrongly, China has established itself as the major player going forward, and as a result, perhaps we should pay a little bit more attention to what's going on over there. So that's what we're looking at today. We've got dollar weakness, we've got yen strength, dollar weakness, a little bit different than a typical risk aversion day, but we're going to have to see how this plays out going forward. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.